Good evening, everybody. Welcome to Zoom at 8. My name is Julianne Peterson, and I am your host every Tuesday night for Zoom at 8. You know, we have been doing this platform for nearly 6 years. Next month, it's 6 years, and we've had industry experts. Unlike tonight, we've got Anna Kogan, who's going to be here with Duckfund, and we're excited for you to know what she's working on and what product or service she provides for you. Listen, if you have a deal or you're looking for a lender, because let's face it, your lender is your biggest partner in transactions. So we're going to bring 60 to 80% of the loan dollars to your transaction. So you want to have a lender that can close. That's your biggest hurdle, is closing. So I would love to have the opportunity to provide your loan, your lending deal on whatever it is, if it's multifamily or if it's the other asset classes, as long as it's commercial real estate. So we're going to look for your T12 rent roll OM offering memorandum and your underwriting. Now you want to stop by the broker to make sure that, hey, is there anything in the R&M that should be below the line? You're going to check in with your insurance to make sure that, hey, upon sale, I'm going to pay a little bit more. So what does that look like? You're going to check in with the assessor's office to make sure that we have the right taxes, and then a property manager. What does that look like? Is it going to be 3%? Is it going to be 8%? What does payroll look like? So have all of those numbers input into your underwriting, and if it still makes sense, and you're ready to put in an LOI, it's time to stop by my desk, okay? And we will underwrite this in 48 hours. So tonight is going to be a great night for those of you who are here, and as well, those of you who are listening after the fact of our live conversation with Anna Kogan, who is the founder and CEO of Duckfund. Before the driving force behind Duckfund, which is a groundbreaking soft deposit financing platform revolutionizing commercial real estate deals, Anna was on a mission to reshape the real estate landscape by combining her expertise in fintech, real estate lending, and entrepreneurship. With a track record of successful ventures, she's committed to driving innovation and delivering impactful solutions. As a commercial real estate enthusiast, Anna, her goal is to redefine the experience of commercial real estate acquisition. Whether you're an investor, a developer, or an industry professional, Duckfund can bring a unique blend of expertise and vision to the table while helping put deals under contract within 48 hours and work on multiple deals simultaneously. This is what sets Duckfund apart from other places that you have potentially gone. So I'm excited to introduce you to this great and live conversation with Anna Kogan with Duckfund. Anna, welcome to Zoom at 8. How are you?
Thank you, Julie. The best elevator pitch I heard about myself. So thank you very much for the intro.
Absolutely. We are excited because, you know, a lot of us are new. Some of us have been doing this for years, but there is this idea that, hey, who are we going to pay a portion of our deal for the EMD? And your solution, I think, is super powerful for so many people in this space. So I'm gonna push it over to you to help explain how you this came about and what you can help us with.
Sure. So just to continue a short introduction, I've been working in financial services and lending and leasing mostly for my entire career. I then went to Stanford to get my MBA degree, and that was a COVID year. So we had a lot of time in Zoom and not a lot of communication, unfortunately, among our peers. So what we all were doing, were thinking about different startups and innovative ideas. So I thought how I can use my lending expertise and build something for myself in which I truly believe. And the idea behind that was to create a product which is not only helpful for the customers, but also doesn't have substantial credit risk to put on the balance sheet. And my husband is a real estate investor in New York. He was with me at Stanford. We were strategizing together. He said, hey, a huge struggle is EMD, especially if you're a serial investor. You want to work on multiple deals at a time, and not necessarily you have all this cash at hand to finance those deals. And that's basically how the idea of Duckfund was born during my days at Stanford. We finally launched the platform in 2023 by the end of the year, and we're actively working for 2024 and 2025. Last year, we secured an institutional facility from Clear Haven. So now we're backed by them. We raised our first line of credit of $100 million to finance those deals. And basically the value prop is to help you with your EMD within 48 hours with an application. So to start, if you don't mind, I will share my screen to show you a short cartoon about the service to entertain you all a little bit.
You're free to go.
Can you hear? Can you see my screen?
Yes.
Let's see if you can
Duckfund.
hear it.
Sign now.
Yes.
Can you? Okay.
Pay later. Have you got your eyes on a hot commercial property, but you lack the earnest money needed to close the deal? Maybe your funds are tied up elsewhere, or your banks are not lending, meaning your deal has hit a brick wall. It's time for something better, something easier, and something smarter. Here's where Duckfund comes in. Our earnest money financing powers property deals like yours all across the U.S. All you need to do is sign now, secure the property, and pay later. Here's how it
I'm not
works.
hearing anything
First,
unless this is a
fill out
new
our
test.
simple digital form.
Oh, okay.
Sorry, Charles?
I can hear it. Can everybody else hear it?
Well,
Yes.
Yeah.
Okay, Charles, you're the only one.
We'll send the link in the chat as well.
Okay.
And submit your agreement. Then, get the green light within 24 hours. Now, let Duckfund take over. We secure the property through an LLC specifically created for this deal. We'll sign a call option agreement with you, granting you the right to buy Duckfund's membership interest in the LLC for the soft deposit amount. We then transfer the earnest money deposit directly into an escrow account, meaning no intermediaries are involved. By the end of the soft deposit term, if you decide to proceed with the property acquisition, you'll simply buy the LLC from us, and the purchase price will be equal to the deposit amount. At that point, the LLC with the associated PSA becomes yours. The application process is quick and requires only a minute of your time, along with the purchase and sale agreement. You'll be amazed at how quickly we respond to you. We can approve funds in just 24 hours and process the deposit within 48 hours. This means no credit checks, no bank statements, and no unnecessary complications. And it gets even better. We're committed to fair fees. Instead of charging you a percentage of the purchase price, we only charge a fraction of the deposit amount, along with service fees for the LLC creation, saving you thousands of dollars. We charge up front, so you don't have to worry about it at the end of the soft deposit term. Duckfund's flexible model lets you work on multiple deals at once without dipping into your personal funds, so you can feather your nest while your rivals are flapping around. Duckfund. Sign now, pay later.
So this is a short explanation video, which we normally provide on our introduction calls, and also it's on our website. It may sound a little bit complicated in terms of the deal structure until you dig deeper into how it works exactly. Let me share the slide deck. Can you see the slides?
Yes.
So basically, the idea behind all that is every deal requires the EMD. You can either invest your own cash, you can raise from friends or family. If you are a serial investor, you probably have a line of credit. not necessarily this line of credit lets you finance the deposit, but anyway, it's super handy to have additional source of cash to finance those deposits. And we created the platform where you can apply for this product. It's a straightforward application process. We need to know where the property is located, what's the purchase price, who's the escrow agent, how long is the deposit. And we need to have a look on the purchase and sales agreement draft, making sure that the deposit is fully refundable. We work only with fully refundable deposits. The product helps you to work on multiple deals at a time, and it also provides you an opportunity to win in the bidding process, where you can increase the deposit size to make sure you win the deal if there are other players who are interested in that. And in addition to that, you always can kind of free your cash, which is already freezed in other deposits and other deals to finance some additional acquisitions. As I mentioned at the very beginning, our goal when we created the product was to make sure that on our side, there's not much of a credit risk. That is why we can close the deal very quickly. We don't do the background, we don't do the credit checks and stuff, but we created a particular deal structure where we make sure that we have control over the cash on escrow. So we basically create a new company for this acquisition, which we own during the due diligence period. And this company signs the PSA and wires the deposit on escrow. And the customer of ours does the due diligence. And if they decide to acquire the property, they just buy the LLC from us and become the party in the PSA. And if they decide not to acquire the property, they can just, walk away. We will terminate the PSA and get our cash back from escrow. Does the deal structure make sense so far?
Let's open it up. Paula, any questions on that? All right.
Can you hear me?
Now I can.
Yeah. Good evening, everyone. I just want to know, what's the percentage of deals that have fallen through on that, and what's the disposition? Do you just get out of the deal? I mean, is that always easy to do?
At the very beginning of the deal, we look at the purchase and sales agreement, making sure that the deposit is fully refundable, and it also should be a sole order escrow. So the termination of the PSA has been pretty straightforward for us. We always talk to the escrow agent before we wire the deposit, making sure that they also understand how the process of termination is going to look like. And your first question on the percentage of the deals, so far, roughly 70% were successful, 30% didn't go through.
Can you share why they didn't happen? Just off the top of your head, was there one reason why they didn't? Just were they not funded properly, or?
Yeah, they didn't raise the equity they needed.
Yeah, a lot of people have this issue.
Yes.
So I do have a question on that. If it doesn't go through, you put the money out and 30 days later they change their mind, they can't get the money. Is there a cost associated with putting that money in?
We charge the fees for the service upfront, so they pay for the initial 30 days, and then if they don't want to continue, we just terminate. There is also an opportunity to extend if they need additional time to secure equity or whatnot. And if the seller agrees to extend the deposit period, in this case, we're happy to provide the extension, and we charge additional fees for the extended period.
Okay. When a lot of these people do the EMD, not your company, but we hire a partner,
Okay.
they bring in their own personal money and then they get it back at closing or even before then, and they are part of the deal. 2, 3, 4, 5% of EMD for putting up that EMD. I've also heard up to 8%. Can you kind of outline what that fee is, or we're going to go through that, and so that we can compare it what it looks like typically.
Sure. So we don't take any equity in the deal per se. What we charge is 2 to 3% monthly on the deposit amount. And that's it. And we charge it for the number of months, which the initial deposit term is. We also charge LLC registration fees, but that's the direct transfer of the registration office costs.
Perfect. Candace has a question.
So when you talk about, say I'm the general partner, part of the team that's purchasing the LLC, that money comes out upfront as we're closing to buy that. How does that transaction come into play? I guess that's where I'm a little confused on this.
So initially, we sign the PSA, we wire the deposit, you do the due diligence. By the end of the due diligence period, you either already have a commitment from your co-investors and you use your or their cash to buy me out, basically refinance the deposit. The deposit stays on escrow. We just change the control of the LLC from me to you, and you become the owner. And for that, you just repay me the deposit amount. Does that make sense?
Yes, it does.
Perfect. All right, so let's keep going.
Can I ask a question?
Sure, Paula.
Yeah, because it is a kind of a new model for us.
Yeah.
At least from my point of view. Have you been approached by institutional banks and those who buy on a large scale more so? I mean, it seems to me that they may use that to manage their money day to day for commercial paper reasons or something like that.
So when we just started, the average check was roughly like $50,000 to $100,000 per deposit. Right now, it increased substantially, and the biggest we've done so far was 5 million. So institutional folks are starting to understand that that's probably a little bit on the higher interest rate for them, but still it's handy and it's a short-term finance. So in absolute dollars, the size of the fees much lower than the legal fees associated with the whole deal or other expenses. So yeah, we're started getting traction among bigger groups as well.
Kelly has a question. How does the end lender look at other people's money as your down payment? Is this acceptable for Fannie and Freddie? I guess I would have to answer that question. Kelly, can you explain this, what your question is?
I think I understand the process. Basically, you're putting the earnest money up front, and then you're getting paid off before it actually goes to closing. So there's not really a concern for the institutional lender, right? For Fannie or Freddie, they're
No.
Not at all. They don't even know about us. Yeah.
Yeah.
Because.
And then I also work with 1031 companies quite a lot. And one of the questions that always gets ignored, in my opinion, is while the money's on deposit, it's obviously gaining interest. Who keeps that interest money? Is that your money? And do you disclose that through your agreement? Or does that get applied towards the closing funds?
So, if the deal doesn't go through, the interest which accrued on the escrow account goes to us. If the deal goes through, it just gets distributed at closing.
Okay.
Does that make sense?
Kelly, does that make sense?
Yeah, I guess you would have to document that in your agreement as to who gets that interest. So it's dispersed at closing. Does it get dispersed to you? Is the question.
The thing with interest-bearing accounts here is that the fees charged by the escrow agent is normally divided between seller and buyer, and sellers are not very interested in paying those fees. So what I've seen so far, we didn't have a lot of deals with having the opportunity to earn the interest on the escrow accounts, unfortunately.
That makes sense. Okay. Angel has a question. Does it count towards the 10% from the GP team? I would say so. That becomes your money. So depends on how you want to structure that. Who's taking responsibility for that? It would be one person. They want to put it, if you want to, if I have 4 partners and I'm saying, hey, I'm going to pay for this, I'm going to put the EMD down, then that would be my portion that would come down. And the extra charges that would be out of mine. And I would probably charge the transaction a little bit for putting that risk up. Or you could say there's no risk at all to the transaction. How would you handle that, Anna?
Yeah, just adding to this question, very often our product is confused with equity, which it's not. So we help put the deal under contract, and then you still need to replace us with the equity. So the 10% from GP. So it's not exactly that, right? It's just a short-term financing which helps you to put the deal under contract and then go out there and raise equity.
So if it's 10% that needs to come from the GP, they would have to bring in the additional 10%. That doesn't satisfy the 10%. Is that what you're saying?
Well, the 10% from GP is for lenders, right? At closing. That has basically nothing to do with the initial deposit. So it's two just different substances.
But it would go in towards the escrow. It would go towards all your fees. Right?
So at the end of the day, if the deposit required in the deal is also 10%, those numbers are equal. But normally the deposit is what, 2 to 5% something, right? So you put the deposit and then you buy us out, your 5% is already there. Then you add additional 5%, and here you go. You have 10% of GP proportion.
Yeah, so I was understanding that correct. Okay, cool. Paula, what's the question?
So Anna, you're a fee. I mean, that's basically, you're just being, it's like an expense, right? So if that's the case, is that a portion that you're paid deductible tax-wise? Is that correct?
Yeah.
Yeah. See, that's why I'm saying if it were done a lot and someone recognized that that's a deduction, it was a high amount of churn, if you will, and also an issue with overnight commercial paper, it might be that I would think there would be more in the future use because of liquidity issues for institutions to jump on that.
Mm-hmm.
That's what I'm thinking.
Yeah, very good point.
They might have a hard time at first finding it and figuring it out, but once they do, bam.
Yeah.
We're working on that day and night right now. Our marketing endeavors are huge. Yeah. It's not that easy because the product is new and it's still, it's very hard to promote it digitally only. It still needs to, be explained in person. Yeah.
I'm gonna throw a monkey wrench in there. What about integration with AI?
We do automated emails, reach out, and LinkedIn, and whatnot. But anyway, the response and personal connection is much better always. AI is not there yet.
Not yet there yet, but it will be.
Yeah. It will be. It will be. But hopefully it will be known to the market already when it will be, but we'll see.
People are going to be flocking to Zoom at 8 to hear this. So yes, it's going to blow up. Your business is going to blow up after this. So, all right, keep going.
Hopefully. Yeah. So here's the short slide on the requirements. So we work with almost all states except California, Hawaii, Utah, and Vermont. And the minimum of the deposit amount we work with is 25,000. There is no maximum per se. It all depends on the terms in the PSA. The minimum term is 30 days. If it's 15 days, we can do that as well. We're going to charge for 30 days anyway, because, it still requires the same amount of work. And we work with the biggest title companies as escrow agents. That's our requirement. We don't work with the seller's attorneys holding escrow. and we always require the escrow to be a sole order escrow, so that we are the only instructing party to release the deposit, and we don't need the seller's approval to get cash back from escrow if the deal doesn't go through. The product is only for commercial real estate and like Airbnbs for rental purposes. So we don't work with residential acquisitions. That's basically all the requirements we have. If the deal matches the requirements, it's good to go. Yes, Paul, you have the question.
Yes, maybe I missed it. For the states that you're not in, is there a legal reason? Like California, Hawaii, Utah, Vermont?
Yeah, they want a license for any type of lending you do. And while this product is not lending per se, as I've mentioned, it's a startup, so we don't want to be in a position where they sue us because they think that that's
You mean
that's
a
a lending
broker's
product.
license? A broker's license they require?
Not a broker's license, but a real lending license for
Lending
any.
license.
Yeah. We plan to get those licenses, but California was in a lot of demand. Utah, Vermont, Hawaii, probably not a lot of demand. So basically, California is our major restriction right now, but we're working on that. Hopefully, in the future, we'll get the license.
So Charles wants to know, how is this not lending?
It's a service, just because what we do is we provide a service to put the deal under contract. We never lend any money to the customer. And it's structured in a way that the interest rate is charged as a call option premium. So it's basically a payment for the opportunity to buy the LLC from us for a fixed price in the future. Does that make sense?
So there's not a time, like, with a loan, you're paying something back over time. Yours is a one and done.
Well, there are, mezzanine loans where, you don't pay anything over time as well, and the interest rate is capitalized to the principal, and then you pay it all back at the end. No, the thing is, there is no actual transaction between me and the customer. We don't provide them the money to pay for something, right? So we just create the LLC, we wire the deposit, and then we sell the LLC. So basically, the service is to put the deal under contract and then get the LLC together with the contract in the LLC. So it's not a lending.
Oh. So I'm impressed you got around that.
All right, what else? Any other questions about this? I mean, 25,000 to get a deal under contract, to get it off the street. You're going to be putting in your LOI. You're going to get a PSA. The PSA is going to be using your LLC, right, Anna? And if we want to change that LLC to, let's say, ABC Apartments, how does that work? Is that an issue? Changing the LLC to the property, or can your LLC be based on what we're going to be using in the future?
So we are very flexible. We always, any name of the LLC when we register it works for us, so the customer can suggest. And also we're using the address of the customer, and basically you'll get the LLC, which is ready to work. Also, if in the purchase and sales agreement there is a clause that the LLC basically can be changed in the process, that also can be accommodated. So, we can liquidate our LLC, and instead of selling you the LLC, we can just transfer the PSA to a different LLC, which, the customer has created up on the end of the due diligence period.
And are we going to register that BOI, or are we going to keep that to ourselves today? What's the story on that? Just kidding. Just kidding. Can we make a decision on that? All right. Pavi has this question. How does that work in a state like Massachusetts, where it can take up to 3 weeks to establish an LLC within the state?
Yeah, that's a very good question. So to be within the time frame, we normally register the LLC in Delaware. We sign the PSA with this LLC, and then we just file the transfer from Delaware to whatever state it should be.
What does that transfer? Does that take a while as well, or is that pretty quick?
It takes a while, but the contract is already signed, the deal is already there, and while during the due diligence period, normally this transfer happens.
Okay, so let's just walk through some of the ones that you weren't able to get funded. There's a period of time where they have an extension period before they close to keep trying to fund it. Let's say we're closing on next Thursday. We believe we can close it, but it doesn't close next Thursday. We want to extend it. How can it walk us through that extension period, or not the extension period, and the transfer to another LLC if we've got a hard extension period maturing? How does that work?
So the customer needs to provide the extension agreement signed by the seller.
Makes sense.
If that's in place, we can extend the period, we charge additional interest rate for that. And then if you need to transfer the PSA during the due diligence or at the end of the due diligence to a different LLC, the PSA should allow you to do so. So it's an additional point of negotiation with the seller. Normally, the seller agrees to the clause where it's stated that you can assign to any other LLC where the beneficiary owner is the buyer.
Okay, got it.
So that, so that it's not, transferred to some other groups in the middle of the deal, basically.
What about they're asking for a non-refundable after a certain period, and then it doesn't close? You're already out of the deal at that point, correct?
Yeah.
Yeah.
We don't do any non-refundables. Sometimes there are situations where a part of the deposit is still refundable and a part of that is not refundable. In this case, we can accommodate to, just leave the refundable part of our capital there, and non-refundable should be replaced by the buyer.
Got it. Okay, interesting. All right, Alex, did you have a question?
Yeah, how does, and actually it's a question to you, Julie.
Yes.
How does the lender look at this, given the fact that the contract is between this Duckfund LLC and the seller?
I think that once you're out, because remember, as she just mentioned, it's non-refundable. It has to be refundable. So when she gets pulled out of it, we're going to replace her capital with investor capital or with GP capital.
But
So-
how does the timeline work? If the contract signed today, the temporary capital gets placed, I assume,
For 30
while the due
days.
diligence, right? So while due diligence is ongoing, someone needs to apply for mortgage or funding.
No, usually, I
No?
mean, no, not always. I mean, we see a lot of people say, I'm going to get through due diligence first, and
Okay.
then I'm going to apply. I don't necessarily recommend that, but the problem is when you apply, you pay 10,000 or 15,000, let's say on a Freddie loan, and let's say your due diligence in that time frame, you don't want to move forward.
I
Now
see,
you
okay.
put some money out for that. So
I see.
it's a
Okay,
short
makes
period of
sense.
time that Anna's product will fit for this. And it will fit
Yeah.
until you're finished with that due diligence, whether they haven't provided you the leases, they haven't done their own due diligence paperwork, or you haven't gotten all of the parts of the transaction that says, okay, we're moving forward. Once you
Right.
say we're moving
Okay.
forward, she's out. Is that right, Anna?
Yeah.
Yep.
Okay.
So
Cool. Thank
again,
you.
it's a vehicle that will help so that you don't have to bring in another person, which by the way, we see this on a regular basis. Hey, Steve is going to bring in the EMD, and then Steve gets pulled away on another deal. Now your EMD is gone. In fact, this just happened to me, and the deal is out. We're out, the deal's out, that guy's gone. So this would be a perfect product to put, get going before you put the LOI in, get all that paperwork moving forward. PSA takes sometimes 3 weeks, right? We get that set up correctly. We start the due diligence from that point. You've got 30 days historically, but it can go on, and then you pay off Anna at the Duck Fund. I think it's
Yeah, just
a
to
great
follow
option.
up on this, there are cases when, the customer wants to start the lending process at the same time as the due diligence.
Sure.
And they do pay the fees, and they do start the process itself on a separate LLC. And then that's exactly the case when the transfer to a different LLC happens by the end of the due diligence period. So they do the whole credit work on a separate LLC, and then as soon as the due diligence is over, they just transfer to the LLC they created for that. Because, we don't let the customer do the credit work from our LLC, just to not to bear the risks associated with that.
Okay. Any questions?
Yeah, say that again, Anna, about the credit report. I have another question about the contract, but go ahead.
Yeah, I was saying that we don't let the customers to start the credit receiving process using our LLC. So that's a separate LLC the customer uses, and they just need to make sure that the seller approved the transfer of the contract from one LLC to the other.
It would be interesting to see that contract, just because, of course, our attorneys have to look at that and approve everything, and it would be interesting to make sure that the risk is taken out. I'm sure it is for you, but just in case, somebody from the equity side has to fund the part that, there's a part that they may be at risk for, that is spelled out in our end on the contract, who's going to do that? Because somebody's got to step up and pay that money just to satisfy on your end. So they're going to have to make sure that those contracts are ironclad.
You mean the purchase and sales agreement?
Yes, how the new LLC that you're transferring to integrates with your LLC, and the fees that end up getting paid for the risk incurred if the deal goes south. There needs to be a contract statement that says, okay, in the event of, it's just like any scenario plan. In the event of the deal goes south, who's going to end up paying the fees to make sure that you get paid, you walk away with no risk, and that there's any other fees that are needed to be paid, they're outlined.
Well, first of all, we don't negotiate the contract, the PSA itself, so it's on the side of the buyer.
Yeah.
And then the transfer from our LLC to a newly created LLC, that basically has nothing to do with our services. So the new LLC becomes the party of the PSA, and all the clauses in the PSA apply to the new LLC. The fees associated are only the fees we charge up front, and there are no additional fees for the transfer rather than just repaying the deposit. So yeah, that's basically it.
Yeah, I would like for your model your business plan to be shown to Mauricio Raul, so he gets to weigh in on our liability from our end. You don't see it, but we need to see it.
We can certainly put her in contact with Mauricio.
Yes, and get that deck out. Yeah, we'll see him tomorrow, but we would like to see that.
So I think, did I see Kelly? What does your underwriting look like, Anna? same or similar to a lender, or is it more basic, like a credit report of a principal?
It's more basic. We do pull the credit report from Experian. We do the plat background check, and we also normally go to CoStar to see what's there on the buyer. But you know, all this information basically, it's not something I mean, the plat identity verification is super important. Credit report is somewhat important because it's not lending. Again, there is no debt associated with the process. And CoStar as well, it's more like for information about the customer and see who are we working with, whether it's a serial investor or it's a person who has just started on the market. So yeah, the underwriting is pretty basic. The most important part of the underwriting process is to make sure that it's a sole order escrow and fully refundable deposit according to the PSA. Because that's basically the source of repayment for us, not the credit worthiness of the customer, but the opportunity to get cash back from escrow.
Very interesting. How do you fund your business, or did I miss that in the beginning? That's going to be your credit.
Yeah, we have an institutional debt facility, a revolving facility for those deals.
Like a line of credit.
Yeah.
Okay. So that it needs to be paid back prior to anything going hard.
Yeah, 2 days prior the end of the due diligence period, it should be repaid. Exactly.
Okay. So you're going to need to have capital coming in, obviously, right? Before you finish, you have to get rid of Anna and her team, and then you have to bring in your replacement capital to move along.
Yep.
Okay. Makes sense. All right. Any last questions before we let Anna go, or she can actually stay with us? Anybody? All right. Well, I think it's a great, oops, Brett.
Hey, thanks. No, I just wanted to say thank you to Anna and Julianne for having her on. This was fantastic. This is really impressive, and all the work you put into this. This is something we're all kicking ourselves saying, why didn't we do this? So very, very astute, and look forward to working with you, Anna. Thank you.
Thank you. Thank you everyone for listening, and feel free to connect in LinkedIn. I put my LinkedIn link in the chat. Feel free to apply on the website. We also have a valuable resources tab on our website where a lot of interesting and useful information for new investors is there. We've just posted the capital raising guide for 2025, where not only our services but Julie's services are like described in details, and you can use it as a handy guide for your acquisition process. So we're always here to help. Feel free to connect in any possible way, and happy to discuss all your deals. Thank you.
So fantastic. So again, it's duckfund.com, and reach out to Anna Kogan and find her on LinkedIn.